Hi. This part is the credit report, and I broke this off from the personal financial statement only because the personal financial statement I could tell was going to be a little long. Um, with the credit reports, I mean, most of the people around St. Louis, they use TransUnion, and usually with a credit report, your scores go from like 300 up to 800. Um, Very few select people have 800. Most people, if they have good credit, they have a 700 plus. Um, Most banks will do loans to people that have credit of probably on the low side, probably 650, 660. When you get in the low 600s, they do not consider that good. And then when you get into the 500s, it's kind of a no. I have seen SBA loans be made with people with a 500 or a 5 something score, usually in the upper 580, whatever. And a lot of times, what SBA does is they look at the score and then they look and see, you can make a case that they have turned their credit around. So let's say 2 years ago they had a bankruptcy or something like that, or they had some bad credit, they didn't pay some bills or whatever. And then the last 2 years, they've actually turned that around and they've actually paid these creditors and they've actually paid on time for the last 2 years. A lot of times SBA will take that in consideration and go ahead and make that loan. If, of course, the bank's going to have to make it first. They're going to have to want to make it in order for SBA, because the bank is the one who has to engage with SBA to do that loan. And usually almost any SBA loan, I don't care, there's certain people that say, well, I insisted upon this type of loan. Well, you can, but the banker's the one going to make that decision. If he doesn't want to use one type of SBA loan or another, he won't use it. If he wants to make the loan and you only want a certain type of SBA loan, then if he wants to make the loan, he's probably going to have to do it. So anyway, the overall, if you have a 700 credit rating, you're going to get the loan, or at least your credit won't hold you back. 660 up to 700 probably isn't that bad. And then two, I've seen people with low credit scores and really good credit when you really look at it, and I've seen people with high credit scores and you look at it and they go, how can you have this? Because they're not paying bills. So anyway, you have to look at the whole thing, the whole credit all together. And there is probably about I think there's either five to seven items that they look at, from anywhere from how long you've had credit, how much credit you have, how much your utilization rate is probably the thing that's really taken off in the last few years as to a really good indicator of bad credit. So if you have, $100,000 worth of credit and you're using 90,000, your credit's going to show up as bad. They only want you to use 30% of it, and if you keep all your accounts overall, all your credit, if you keep it down to a 30% level overall, and you could have higher ones in some and lower ones in some, but if you keep the average to 30%, you will have a very good credit rating as long as you pay your bills on time. The one I'm going to have is I'm actually going to show a TransUnion credit report that was run by a bank. The only thing is I had to white out all the stuff on it, so there's not much left. So it's just basically a bunch of blanks, but it will give you an idea of how that is done, how it's so anyway, it'll show really what they're looking at when the banker looks at it, and basically he's just looking at the score. Now, usually if we really want to make a loan, what the banker will do is he'll look at the credit and say, do you pay your bills on time? And if you pay your bills on time over the last few years, and maybe you had some utilization problems that were high or some other things that dragged your credit down, a lot of times they'll go ahead and make it. A few years ago, the problem was people were I don't know. I mean, a lot of people felt like they were abused by companies that were selling phone plans, because they would treat them bad. And there was a lot of times where they say, "Well, I don't owe that money, so I'm not going to pay it." well, if you don't pay it and they send it to a collection agency, your credit's going to go down. So I always say, if you have disputes, either go ahead and pay it and then go ahead and dispute it. I mean, if it's a very large amount, maybe you don't have the money to, but I mean, I've seen people that have bad credit that have it because they've got a $20 loan on their health care that they don't think they owe. So it goes to a collection agency, and as soon as it does that, their credit is toast. It's not really toast, but I mean, it depends on other factors too. But I mean, that can drag your credit down faster than anything. I mean, just, you're thinking the principle of the thing. I don't want to pay it. Well, if it goes to a collection agency, you're the one that is going to get hurt on that. So anything under, I would say, $100, $200, I'd just pay it and then go ahead and dispute it. So anyway, so what we're going to do is we're going to go ahead and I'm going to actually have my part as a part of the video where it shows the credit, the TransUnion credit report. It's really just going to show you enough of it that you'll get an idea of what it has. So that's coming right up. Hi. This is the part where we actually, and there has been kind of a separation here. This is the part where we actually take the TransUnion form and actually look at it. And with this one, this is an actual one that was ran, but I had to white out everything so I don't get sued. And when you white out everything, you've just got a whole bunch of blanks. So anyways, you can see it says TransUnion at the top. To the right is the subscriber's name and then some input parameters, Social Security name, current address off to the right. And then they do have his name is right above where it says also known as, and they would have his name and then also known as if you used any other names. And then Social Security, date of birth, phone number. And then underneath that, they'd have your current address and then your previous address and then another space for a previous address. And then they have your employment. Some people are self-employed, especially when they're getting business loans. But anyway, it has that on there. Your position, whether you're owner or whether you just work there, whatever. The start of that, and then in file effective, this other date. And then they do have some alerts, and that would depend on the, this one just says clear. Anything that would be alerted, like maybe you're using a different name or something like that. And then on this one, they have the Military Lending Act, SEER. I'm not really familiar with that. I am familiar with all SBA's military lending, which is okay, but it really doesn't go far enough. But anyway, that's for another video. And then the scoring, and then the type of score, this FICO score 8. And basically it just says explanation on 008 is too many inquiries in the last 12 months. Yeah, that's probably because he was looking for this loan. Score of 739 is very, very good. Like I said, most banks, if they see a score of 700 plus, that's a doable loan. We'll do it, at least from the person's credit perspective. There may be other things that he has problems with. So anyway, at the bottom of this is like the next part. And the next part really shows you creditors and actually shows you like the account numbers. And then it goes as far as to say your high credit, your terms, your balance, your past due. And then, this is, what the loan type is. On this one, there are 2 credit cards. And then the type of loan, which would be revolving. And then if you look, a lot isn't that important. But when you look at the bottom of that on the right side, it will actually say payment pattern. And then it will go ahead on the right of that and it'll say, months 1 to 12, months 13 to 24, whatever. And then it'll have little ones. The little ones mean that he paid his payment that month on time. And then if they have an X, it usually means different. Of course, there are different reporting. They can all use TransUnion, and they can report this a little different depending on the company that's selling you the TransUnion. You don't have to buy from TransUnion, but if you buy from somebody else, they will a lot of times use TransUnion. So all these won't necessarily look exactly alike. But anyway, this gives you a good idea of if they've missed any payments. If they've missed a payment, it means that they literally were 30 days late. It does not mean they missed it by a day. The way the credit reporting works is they report like monthly. So if you show an X on here and you show that you didn't pay that month, you didn't pay for 30 days. It wasn't just you missed it by one day. So anyway, so that's a little bit more important, and bankers take that very seriously. That's also where if you had bad credit and the banker looked at it and he said, well, the last 3 years have been great. I mean, you've never missed a payment. You've done real well. And that can sometimes mean that you can make a case for making that loan. So anyway, as you can see, the bottom, the two trades, Bank of America, Discover Bank, you know, I left in the high credit there. He was a pretty good customer, 20,000 under Bank of America and 24,000 under Discover Bank. And like I said, he had all ones, and that's really what we look at. We look at to see if there's any X's in there or any, you know, whether they'd have a charge off is another thing that's on here that we would look at. We don't like charge offs. That means that the person didn't pay it, and the trade, whether it be Discover Bank or Bank of America, just said, hey, we're just going to charge this off because we can't collect it. And then at 2, we'll probably go to collectors at that point also. But anyway, this does show under the Bank of America or Discover Bank, it does show, you know, where they had any late payments. You know, in the last 40, how many days were they 30 days late? How many days 60 days late? How many days 90 days late? And usually when you get into those late payments, it does hurt your credit. And a lot of times, you know, if you're making a lot of late payments, you're not going to have good credit. So anyway, that's one thing that you can, I mean, obviously if you have the money, you know, you can pay on time. What does surprise some people is that we'll have some businesses that are good businesses and the owners are well-to-do people. They get paid a large amount of money, and a lot of times they get crappy credit. And usually it's for dumb things. It's for stuff like principal. They wouldn't pay that because they owed this $50 and they don't think they owe it. I mean, it's things like that, or it's just they don't care about paying on time because they got the money. So anyway, it is kind of weird that sometimes you'll have people that really have the money and have crappy credit. So, but it doesn't happen that often. But it does happen with a lot of business owners. You know, so anyway, and those are usually where the bank will overlook that because he knows the individual, he knows the business is doing well, and he knows the guy makes good money, so he's not too worried about it. So anyway, that's the TransUnion credit report. All the credit reports are basically the same. The bank will usually run that, or lending people will go ahead and run that credit. I know SBA will take these for up to, I think it's up to 90 days, and then if it's older than that, they'll want a new one. And banks will look, they'll use a credit report that's a year old and it doesn't bother them. So anyway, that's the credit report. It is a necessary evil of getting loans. And if you have any, you know, in any of these videos, if you have any comments or if you have any questions, you can go ahead and ask them in the comments section, and I'll try to follow up on all of them. I mean, if you want me to do a complete analysis of your business, I don't think I'm going to do that, but any questions I will try to answer, and that's no problem. So anyway, thank you very much, and I should, like I said, I should have these videos coming out about twice a week. Anyway, thank you very much. That's the end of the video. Remember to subscribe, because there will be a lot of really good information coming up, and you can always, if you subscribe, you can always go back in and look at past videos and things of if you know, things that interest you or things that you have to know because you're getting a loan, and this will cover not just getting your first loan. This will cover if you've been in business for years and you're getting other loans. So hey, if you could subscribe, and if you got any good information, only you are the judge, but if you did, hit that like button, and I'll see you in the next video.